Well, thank you, and good afternoon or good morning, everyone. We're going to go through the generation skipping transfer tax, commonly called the 2600 provisions of the Internal Revenue Code. And keep in mind, in the big picture scheme of things, this is relatively new in that it came into the law in 1986. And prior to that, there was some remnants of a prior tax that was eventually repealed by Congress. What we're going to focus mostly in on are the 2011 transfers that you made, that are going to necessitate gift tax returns, and then the 2012 transfers you're working with clients on right now. Very technical area of the tax law. And I think what happens here is you really need to do, before you touch gift tax returns or before you draft wills or trusts, unfortunately, you need to get this level of knowledge. So, and there's nothing easy about that. Now, when we start, what we're going to try to do today is build a good foundation. So for some of you, some of that might be redundant, but it will make sure we shore up what you already know. We'll talk about the immediate planning opportunities. Now, here's the reality, is Congress may limit our ability to do some of this generation skipping planning. The $5 million exemption, which this year is $5,120,000 for GST purposes, could disappear. We all know that. Now, the other thing that could happen is Congress could create a federal law against perpetuities, which would, in the Internal Revenue Code. Now, this would not be a property law, unconstitutional property law type federal statute. That would never work. But what it would do is say that your GST exemption evaporates when the rule of perpetuities is run. It would still get you out over 100 years, but it would limit some of that. So a lot of our clients are looking at, should we get a dynasty trust in place right now? And this is very important planning. We represented a gentleman that in 2007 received a tremendous amount of wealth from a trust created by his fourth great-grandfather. And at the end of the day, our client would have only received about 6% of that amount had his fourth great-grandfather not done such good planning. So we'll talk about lifetime gifting. We'll go through the dynasty trusts, what are they and how they work. We'll talk about spousal access trusts, irrevocable life insurance trusts, which for the lawyers and CPAs that are listening today, the irrevocable life insurance trust is really a tricky area. And you both need to coordinate who's going to do the gift tax return and how are you going to allocate GST exemption, because you can't have that fall through the cracks. Now, there are some automatic allocation rules we'll touch on, but they don't save the day every time. We'll talk about installment sales. We'll talk about grantor trusts. Grant remainder sales has an end around the GST rules. Do they work or not? No one's really sure, because there hasn't been any litigation on this. Talk about split dollar, which is still very vibrant in the right situation with second-to-die policies for closely held business owners. And we'll touch on defined value transfers in a small sort of way, because whenever we're doing GST planning, we have to make sure, where are we going to end up.